3 minutes past 6, guys. We're going to kick things off. So big welcome to everybody joining us this evening. An exciting event for us. It's our first ever live investor webinar that we've ran in Flender. So without further ado, I'm going to kick things off and share the agenda for the evening. So I'd like to introduce myself. So my name is Colin Canny. I'm head of originations with Flender, and I'll be your host this evening. And I suppose we will, go through a wide range of, topics of discussion this evening. I'm delighted to be joined by Byrne, our new CEO, who has just recently been appointed in his position within Flender. And Graham will give us a brief background and an overview of his experience in the non-bank space, as well as his plans, vision and strategy for Flender into 2021 and beyond. I will then discuss the recent investor survey and the results coming out of that, and also give you some overview of the opportunities that we have put to you as retail investors on our marketplace in the last few months. We'll also announce the winner of our recent survey as well, competition. And of course, towards the end, then we will give you the opportunity to ask the questions that you want going forward for clarity on any queries that you may have. Okay, so without further ado, I'm going to pass the baton over to Graham. So I'd like to welcome Graham this evening, and I'll hand the reins over to you, Graham.
Yeah, thanks, Colin. If you could just click onto the slide there. Yeah, welcome everybody. This is the first time that Flender has done a webinar with our retail investment community, and we're very, very happy to do it. And it'll be the first of many different events that we're going to have to communicate with you guys on a more concurrent basis, making sure that we're keeping the topics and information relative to what you guys are looking for. I just wanted to give you some brief background on myself. Just over 25 years financial service experience, of which 20 years of that is in non-bank lending or alternative bank lending. For those who would have heard or not heard, I would have started out my career in GE Capital before setting up one of the first non-bank competitive lenders, which was a company called Byrne Financial Services. Set that up in Ireland in 2005 and managed that business through its growth until 2012, which then I went in to take over Byrne Financial Services in Europe. A significant amount of markets. We had 8 different markets with 20 different operating companies, obviously dealing with all sorts of different variants, but the SME market space is pretty much the same as it is in Dublin, as it is in Dusseldorf, as it is in France or Scandinavia. So latterly, I left Byrne Financial Services Europe to go and work as the managing director in Cardinal Capital Group, Ireland's largest indigenous investment company. You may from time to time see their rollout of investments in the private equity space as you know, brands as well known as Carol's Meats to AA Ireland to Lily O'Brien's, and they would have been heavily involved in commercial real estate and commercial real estate development funding, with also a specific area of concentration around SME and SME debt funding. So these are the companies I worked for and effectively honed a lot of skill sets which I can deliver into Flender Ireland. I started on this 1st of December, just before Christmas, and it's been an absolute roller coaster ride since. And you know, we're looking at the Flender strategy for 2021 and beyond. You know, the fintech lending, digital SME lending, and including within that digital SME lending is the capabilities of peer-to-peer lending and peer-to-peer investment from a retail point of view, is the future of what the way SME lending distribution, SME support, and SME solutions are heading. And one of the, it wasn't even a thing that I had to even think about when I was joining the Flender family, only on the basis that, this is the right side of history to be on, and we're trying to pave the way for Irish SMEs to be able to receive supports, not just from the crowd community, but also from other institutional communities as well. So it's very, very exciting. I mean, the main sort of 4 pillars for the strategy and beyond, are I'll keep it fairly simple. The platform itself, that is the all-encompassing center of what the business is. It's a platform that enables us to originate loans and solutions to the SME community, which is incredibly important. The platform has an extensive capability, but obviously over the next 12 to 24 months, we'll be putting a huge amount of time and investment into expanding the capabilities of that platform. So, the platform itself can create a much more dynamic and agile services to the SME community. We'll also, within that time, as part of the platform build out, looking at different products. These products that will complement our term lending product, which is the most sought after product in the SME borrowing space, with products like revolving credit, products that will be associated with environmental and green capabilities, and products that will look at other assets as well, like receivables and property potentially. So it's very exciting from that point of view, but it's a natural tie into the existing products that we have at the moment. And it's something that we would find very complementary and build out our portfolio and allow us to attract a lot more opportunities. Fundamental to that, obviously, is our funding strategy, and our funding strategy is quite extensive at the moment, and is obviously consuming quite an amount of time. Flender will pride itself on being a digital lending platform for SMEs, and the 2 key components of that are you guys, the crowd community, and the institutional community. And we want to make sure that there's a balance there between offering the crowd and the retail investors the opportunities to support and invest in the local SME, Indigenous SMEs, and at the same time as well allow institutional originators to support those businesses. And it's all about making sure that Flender can go from being a very good digital lending platform to a very scalable, large SME lending platform, because this business is not about taking small amounts of share within the existing banking or non-banking market, but we want to allow Flender, with the product range, the platform, and extensive funding, we want to effectively take on our banking friends and really, really show them about what innovation, what deliverable service and solution is all about. So that's something. And then over a period of time, we'll be expanding into new markets. Those markets will probably predominantly be the UK, Germany, the Netherlands, Belgium, and France. But they will be on the basis that the platform, obviously, it gives us a huge amount of scope in order to do that, and we'll be finding partners within those markets to expand our brand and our market. And just lastly, just as a note, so we have a new executive team that we've brought in of huge amount of experience, and we've scaled out our executive team to make sure that we can execute the strategies as I've laid them out, which puts the business in a much stronger position moving forward. And along with that, we'll be opening a new office in July, on the 1st of July, hopefully, fingers crossed, when we can get back into full functionality. And we'll also be recognizing that we've got a very, very exciting brand and brand identity work that's being carried out at the moment that will be launched at the same time. So it's incredibly exciting. I must congratulate all of you for supporting Irish SMEs. Apart from my day-to-day job, I'm also the current chair of the Small Firms Association, which has, during the pandemic, has absorbed a lot of my time, simply because the small Indigenous Irish business community needed and wanted a huge amount of support. So late at night, I would be obviously proofing documents about trying to lobby policy, about making sure that government supports are there to provide supports for the SME community. But I was having an interview recently with Richard Kern, the Irish Indo and of RTE, and there is a strong belief that the crowd community, the retail investment community, has a big part to play in supporting Indigenous Irish SMEs, and it's supporting, in de facto, supporting the Irish economy rebounding out of the pandemic and the other challenges that we face. So I hope that gives you a flavour for myself and what our plans are. It's going to be great. It's going to be exciting. I'm very proud to be part of the Flender family, and I'm going to hand back over to Colin, who is going to give you some insight into the survey. Thank you.
Thanks, Graham. So yeah, some of you would have taken part on this survey over the last number of weeks. So thanks to you all for your participation. We had a fantastic response with nearly 400 people responding to it. And as you can see here, I suppose we took some of the key takeaways from the survey. So I suppose one of the most positive and pleasing aspects of the survey was your interaction and your experience of working with Flender as a retail investor. And over 92% we're happy to say have had a good or above average experience with us, and indeed a high proportion of you are quite happy with that experience you've had to date. So that makes us very proud. Obviously, there is a small proportion of you that maybe have had some issues in terms of your experiences with investments and that over the last number of years, and look at it as our job to enhance those experiences as we progress going forward. I think one of the most pleasing aspects as well from the results, as Graham has alluded to there already, is the sentiment for supporting Irish SMEs at the moment. It's fantastic to see that while many of you are happy to get return on your investment and obviously are happy with the structure and layout and the simplicity of working on the Flender platform as an investor, the sentiment out there of getting behind Irish SMEs in their most difficult hour of need, if you want to call it, over the last 12 months has been really, really great. And from somebody that is speaking to SMEs on a daily basis, those people that have been successful with attaining funding on the marketplace with your support are very, very grateful of that. So that's very, very pleasing to see that as one of the actions coming out of the survey. In terms of, I suppose, overall activity, happy to see that there's quite a high percentage of engaged investors on the platform. So we have over 5,000 registered investors on the platform, with a high proportion of those actively engaged. Obviously, with the minimum investment of €50, it is, I suppose, an easy threshold for somebody to get involved, at quite a small scale. And we've seen over time that people have started quite small and grown their investment over time. So that is fantastic to see. Tonight, obviously, we hope that this is phase one in our approach in terms of re-engaging with you as a retail lender network and trying to look at those 9, 10, 11% category that are in a dormant or perhaps non-active silo that we want to try and increase their engagement with us. And we hope that with more engagement and perhaps webinars and some detailed survey results that we'll do over the next few months, that will help with that. Another key aspect from the results as well has been, how educated are our retail investor network. One of the most pleasing things was that we have multi-users across many different platforms, not just in Ireland and the UK. We've seen that quite a few of you guys are on multiple platforms, into continental Europe and even indeed further afield. So that was quite encouraging to see that we have a well-educated peer-to-peer crowdfunding retail network. And some of the outcomes of the survey was enhancements, product ideas, suggestions, indeed user, interfaces in terms of, mobile development, in terms of apps and stuff like that, that, many of you are used to using on other platforms and other digital lenders. So look, that was really, really pleasing to see that as well. And then I suppose in terms of, what's most important to you guys as a lender network and as investors, we were very eager to hear from you in terms of, what your level of appetite was, first and foremost, from investment opportunities on our platform. And also to see, what, term length, or indeed what the desired term length was for investment opportunity. We are familiar with some platforms that require you to fill out maybe a risk questionnaire to determine your risk appetite. However, with the Flender platform, I think that's why it's seen as an advantage and indeed a benefit to many in terms of its simplicity to use. We don't have that. So people can manually pick and choose their investments, or indeed you can set up auto Flend, which I know some of you are very familiar with, whereby you're auto enrolled into campaigns going forward. But I think just one of the key takeaways was that, it's quite evident that there's a vast array of risk appetite out there, but it's very much evident in the medium to high risk. So for me, as somebody that heads up our originations team, we're very mindful of giving you guys the right opportunities, not alone to get your returns on your investment, but also to get your money back. So that's as important as indeed the returns that are available there. Also, as you may have seen recently, we're trying to give opportunities that suit the duration and term length of what money you have on deposit. So key takeaway here is that very much in the last 12 months the appetite is there for 12 to 24 month terms. Anything north of that, you can see that possibly on our marketplace it does take quite a considerable length of time to fill. So usually we are seeing deals that are up to 24 months filling within 72, perhaps even 48 hours. Anything in the 36-month category is usually taking upwards of a week. So for us, we want to try and provide these opportunities for our investors, so that if you are looking for investment opportunities, which I know many of you are on a daily and perhaps a weekly basis, we want to make sure that you're getting a fair crack at that. So I suppose just then moving on to the marketplace, and I suppose I know there was many quite different questions and people asking about what determines what goes up there. As you can appreciate, my role and with the originations team, we're very mindful of approaching businesses that are currently open and are actually operating throughout level 5 restrictions. At various different stages over the last 12 months, we've had to pivot on a daily, indeed a weekly basis, dependent on the guidelines from government. I know many of you on this call this evening are from different jurisdictions across Europe, so you can appreciate that what might be evident in Italy, France, or Germany might be completely different to what actually is enforced here in terms of the government guidelines with COVID. So we've pivoted our business and indeed our origination strategy over the last 12 months to provide business to you guys on the marketplace that are actively open, that are actively generating revenue, and are a safe bet for you to actually invest in. So I suppose just to push back that we probably have not seen as many opportunities as you can appreciate over the last number of months due to this fact. But here are just, I suppose, a sample few opportunities that we've invested in terms of putting it out to you as investors on the marketplace in recent weeks. So as you can see, Chris Hall Limited is a courier company involved with the transport and logistics of timber products. Obviously, what's evident here is that building and construction was actually still operating up until the last lockdown, so they were quite busy. And they have a number of contracts with Quilcha and some state-owned bodies, which has helped them actually to maintain a high degree of business activity despite the level of restrictions. And they've also just pivoted their business into wood burning and fire chips, which indeed the investment has actually been utilised for. So they've purchased machinery to pivot their own business into not just timber haulage, but also adapting their products and services for the actual surrounding market in the Tipperary region here in Ireland. The second one there you can see then is Lismore Park Pharmacy. Obviously, you know, pharmacies is a frontline essential service. So, you know, that dictates to us on the originations front in terms of identifying, you know, retail businesses that are open, that are busy. You know, it goes without saying that pharmacies over the last 12 months have been probably busier than ever. So, you know, Lismore came to us looking for working capital for their ongoing, you know, business. You know, they've seen a huge increase in turnover and in demand for their services over the last 12 months, and they envisage that will get, you know, busier over the next few months as well in light of the pandemic. So, you know, again, for us, giving that to you on the marketplace, it very much is a safe, you know, and hopefully a reliable business to get involved with. And, you know, we were delighted to see the appetite from you guys as lenders as well, that €100,000 was funded in less than 24 hours, which, you know, again, you know, shows that the power and the appetite out there at this moment in time for, you know, that level of funding and that type of industry as well. So the other two there, obviously, you know, construction focused. So an engineering company, obviously in light of the current restrictions, you know, engineers, you know, are not on site as much as they would have seen possibly in early January or before Christmas. So, you know, we've obviously, you know, maybe eased our approach in terms of, you know, targeting civil engineering and those type of businesses over the last few weeks. So, you know, we haven't seen as many opportunities in that space. And alongside that there with JF Flynn Construction, you know, construction firms, very, very busy in Ireland over the last 12 months. However, for us, you know, we're keen. The first thing we ask is, you know, are they working on any state contracts, any schools, any, you know, public buildings, you know, to ensure that they're actually still operating throughout the level 5 restrictions. So, you know, again, you know, to reassure any investors on the call this evening, you know, enhanced due diligence goes into each particular client that we engage with on the front end. So that's from initiation of picking the phone up, you know, in normal circumstances, calling out to the business or doing a face call like this. You know, we obviously gather the required documentation and it's put into our credit team for a full credit review. But the originations team have a key role to you guys as investors to reassure you guys that these are a safe bet in terms of investment opportunity. So, you know, I suppose it is a fine line in terms of, you know, putting up ample opportunities and putting up the right opportunities. But, you know, we hope that moving forward, you know, over the next few months, that you know, you will see an increase, you know, once the restrictions ease on April 5th. You know, as I said, I was speaking to Graham this morning, and, you know, already we're seeing, you know, some degree of, you know, anxiety out there at the moment. Just to give you some market intelligence, that people, you know, are still waiting, you know, to see what comes out of the next phase of restrictions. So, you know, many businesses that myself and my colleagues are speaking to over the last week or so, they're waiting to see what comes out. You know, whether it'll be a move back to level 4, perhaps an ease of restrictions. You know, there's talk of obviously construction and certain outdoor activities being eased for people here in Ireland, you know, over the next few weeks. So, you know, that in itself will hopefully drive confidence and, you know, I suppose the ability for people to engage and take on additional debt as we come out of the next lockdown. So, look, I suppose for anybody that's, you know, is familiar with the marketplace, you know, firstly, can I say thank you for your support. It means a lot to me and my team that we see support coming from the retail investors for these opportunities. And I suppose lastly, before I finish up, you know, there is a degree of sensitivity with business owners as well around the marketplace. So to put some context on this, in every you know, application, we obviously discuss with the client if they're comfortable with the publicity attached with the public marketplace. As some of you are familiar with as well, you know, we do have an auto-fill category. So you may see on occasion whereby a deal may go live, it might be auto-filled within a matter of minutes, so it doesn't go onto the public website. You know, as you can appreciate, various different businesses have various different, you know, sensitivities attached. You know, but we're hopeful of breaking down those barriers, and it's something I've spoken to Graham about, you know, over recent weeks, is to try and, you know, educate people on the benefits of, you know, what we're trying to achieve here, and, you know, taking on additional credit and additional debt shouldn't be seen as a negative thing. It should be seen as a positive thing for your business, that you're looking to grow, you're looking to scale, you're looking to expand. And for us, over the next few months, we want to, you know, make sure that we're supporting SMEs in a post-COVID environment, environment, that the recovery is enhanced by efficient service from Flender in terms of deployment of that capital. So I think that's a very important point to say that while people might be asking why there isn't opportunities coming onto the marketplace, there is obviously the question asked, should we, are you comfortable with going on that platform? So I just wanted to address that. So that's everything from me there. Graham, I don't know if you've anything to add before I finish on that slide.
No, that's it's an excellent excellent round of the survey, and we will be sending everybody the copy of the full survey and survey results. Also attached with that communication will be the ability for any further questions or anything that's been triggered within your mind to maybe ask at a further point. And once we get all that information in, we'll be able to respond accordingly. I think it's very important what Colin has said about, our levels of due diligence and, how we have to, how we have to respond to the current pandemic and the current conditions, which allows us to connect with our potential borrowers as well. And but it's a great credit to the team there that they've been able to engage with the potential borrowers, engage with the retail investment community, and make sure that what we're putting up is something that offers you guys the best rate of return for the right level of risk. And hopefully coming forward out of the April the 5th, we will see more and more activity hitting the marketplace, which gives you more and more options and opportunity to support local business and invest in to get what is an excellent return. So would you maybe just go on to the Q&A, because I know we've had
so
questions.
Just before we move on to the Q&A, guys, as you know, we ran a recent investor competition to drive engagement on our survey. Thankfully, we received just over 400 responses to that. So I'm delighted to say that Andrew Driver is our winner of the survey competition. So if Andrew is on the call, we will be in touch over the coming days. So congratulations to him. And again, thank you for your support, Andrew, indeed with the survey and also your ongoing investments with Flender on the platform. So well done to Andrew there.
Okay, so do you want to just have a look at the Q&A?
Yeah, so guys, this is your opportunity. We'd encourage you to use the Q&A tab on the screen in front of you to ask any questions. We do have some questions that have come in advance of the webinar this evening. So we'll put it over to you guys there if you want to ask any questions. And my colleague, Cassie Long, who's on the call, will introduce the questions to us.
Thanks, Colin. So we got a lot of emails in from questions from the investors. So just the first one here. Given the way the banks are going with fees and negative interest rates and cash balances, when do you think you will need to introduce some fees to cover your costs in these areas? And what do you think is reasonable?
I could take that question, Colin. What we believe is that the way forward for part of the digital platform strategy across crowdfunding platforms is effectively giving the retail crowd community the ability to earn quite significant returns based on the investment that they place in. Because it's all over the news media and all over the the business websites and communication that we're currently sitting in a negative return on cash deposits, and that's because the cost of holding cash on deposit is now a thing of the future. It's something that's imposed on both the banking community and on the non-banking community. Obviously, to address that, what we're trying to do is we're looking at making sure that there is a balance across the level of grading and risk that people take with regards to the rate of return that they make, and the fees and charges associated with or will align itself just to make sure that we can manage the cost of investing into the platform and investing into the origination of giving the marketplace the opportunities. And those costs will be effectively just to make sure that we are covering the costs of the banking community of placing on us for negative rates on deposit. So that's something that we are looking at very actively at the moment.
Perfect. Thanks, Graham. Another question here. What are the tax implications of gains? Does it fall into capital gains tax or some other tax bracket?
Yeah, can I just take this one again, Colin, if that's okay? Just on the whole tax position, tax liability, tax regulatory and tax compliance, and the whole regulatory compliance environment around crowdfunding is something of a bit of a grey area at the moment. Having said that, the reason we have actively gone out and searched and found a 40-year experienced corporate CFO who is actually joining the company on Monday, and his particular expertise is in not just Irish, but in multi-jurisdictional trading and lending platforms. And this is something that we will be engaging with Brendan on Monday, and what we were proposing to do was actually to send out some correspondence to the crowd community and post something on our website with regards to this particular section around the liabilities, and hopefully you'll find that useful for that show. Okay.
Perfect. Another question, what new features will be offered by Flender this year, and will an app be made available for easier mobile access to the platform?
Okay, yeah, well, as well as the platform itself, what we want to do is create a great more dynamic analytics to the platform, so we can provide greater levels of detailed information to all the stakeholders. And that's part of the platform build out itself. I mentioned the new products that will be coming on stream, but it's also, the platform capabilities and the interaction with the web falling into the platform will be greatly improved over the next 12 months with significant amount of investment from our side. With regards to an app, the app is on our priority list as a build out, and we hope to be in a position to give further information in that within the next sort of 6 months. Okay.
Perfect. And I'll just get some of the questions here that's been typed in. So column C there, how does the due diligence and credit checks done by Flender on a company compare with, say, the traditional lendings like banks? Are they as comprehensive?
Yeah, look, I'll take this one, Graham. So look, I think in the early days of Flender, the business strategy was very much focused on early stage companies and startups. So, these were businesses who maybe were established by family members, and it was very much seen to, Flender was a platform that focused on your social lending circle. So it was reaching out to family members and your wider social circle to actually get investment into that company that you were establishing. It's probably no coincidence that a large proportion of, arrears, and when I say arrears, a very small percentile figure of our loan book is in arrears, but it is from the early days of probably 2017, 2018. The business then changed its overall strategy to focus, on more established businesses later on into 2018. And, we implemented a fairly strict credit policy and hired, experienced credit people in that regard to implement that policy. And those credit people were indeed coming from a pillar bank background. So to answer your question, we like to think we're different than the pillar banks in terms of our speed and efficiency. We use our financial technology to obviously speed up the processes, but to allay any fears, our checks in terms of our credit reviews and our due diligence is every bit as detailed as that of a bank or other lender in the marketplace. And as I said, as Graham has mentioned, we've quite a senior credit person coming in as well, joining the executive team in the coming weeks that we're very excited about. So, that will even get more detailed in terms of that. But, to allay any fears, from an originations point of view, and I've worked in AIB Bank myself, and I've worked in another non-bank lender. Flender is very much seen as, a very detailed when it comes to credit review, and that goes without saying that. Look at, we're happy that we're comfortable in that regard.
Yeah, and if I could just maybe just come in there as well. I mean, credit due diligence it's very much an evolving process, which is underpinned by very strong fundamentals within policy, and it's one of the major things that we decided to go on by improving our executive team with more senior credit people from non-bank lending sectors, such as myself, because risk management and risk mitigation is it's effectively underpins any USPs with regards to how you fast and flexible you deliver solutions to SMEs. And it's not the other way around. People usually think it's the other way around, that you differentiate yourself by being fast and flexible. You can only be fast and flexible with very strong risk mitigation processes and risk management processes. You can't avoid risk. You can't avoid certain parts of credit mitigation. But what you have is you build teams and processes that lead the market, and that's what we've done. I did that before in Bibby Financial Services in Ireland. We effectively the best team in the marketplace, and that's what allowed us to grow very, very quickly. And we're bringing those same skill sets into Flender, so it's very exciting for us.
Perfect, and I'll just get another one off the list there. Is there a referral bonus for introducing new members?
Colin, do you want to answer that?
Yeah, so I know Flender has adopted a referral bonus in the past for people that refer friends and colleagues to the platform. We've obviously temporarily suspended that for the time being, obviously due to the pandemic and various different challenges that the business have faced from a cost perspective. We've just suspended that temporarily, but it is something I think myself and Graham have spoken about, that going forward we will be reviewing that hopefully in due course.
Yeah, I mean, look, it's something that is part and parcel of a growing business, which is, having a significant referral program, whether it be from client to client or from a crowd investor to other crowd investor, and bringing them onto the platform. It's obviously something that we would encourage, but I think on the basis of the pandemic being around, we try to make sure that we just kind of hone it back and just stick to the fundamentals of what we know, to be able to deliver solutions to how we to the market as we know it. But it's something definitely that we will be looking at through the platform and through the development of the platform, which encourages more retail investment onto the platform. So yeah.
And I suppose just on the reverse of that as well, in terms of referral schemes, I know there's a few accountants and some intermediaries on this call this evening. We do offer that in terms of a referral scheme for any businesses that are seeking funding. So if anybody on the call is interested in that scheme, happy to engage off this call in the coming weeks.
Okay, is there anything else, Cassie?
Yeah, we'll try and get one more off the list. What supports are offered to businesses by Flender when they've stopped payments before the debt is deemed non-recoverable?
Okay, so I'll answer this in part, Colin, if that's okay. So look, as with all other institutions and non-bank institutions, the pandemic threw up a number of difficulties for both the funder, i.e. Flender, and the borrower. And predominantly the borrowers, as we saw through the initial period from March to probably June of last year, where the pandemic hit its first wave, we would have seen somewhere around 55% of our loan book requested a forbearance or payment break or payment holiday over a short period of time, which is pretty much in line. I mean, most of the banks would have received probably 80 to 85% forbearance requests over the same period of time. Now, the breakdown of those forbearance solutions were that the client was able to part pay full, part pay up to a certain percentage, or just cover the interest on the loan. And the longest request we had for forbearance was over a 3-month period. But it was part and parcel of the economy and banking and non-banking market to go back into its borrowers and help make sure that they are safe and make sure that they're supported through this exceptional circumstances. As the year progressed, we had a sort of mini opening which saw the forbearance levels come down quite significantly, and then obviously kind of slightly increase up. I think they came down to about sort of 30% as we headed into September, and then slightly shifted up again to sort of 45% pre-Christmas. But at that stage, what we had was the majority of our clients were within those forbearances were paying the interest and not the capital as well. So there was only a small percentage that were on full forbearance. I think it was about 4 or 5%. And given a lot of companies who have survived the initial wave of the pandemic now are effectively running on incredibly strict, strict cash flows through the government supports and government cash grants, etc., etc. So they're all running pretty much lean. So the request for forbearance has dropped considerably, and it's trending just below 10% at the moment, of which only 2% are full forbearance.
Yeah, and I suppose just to come in there, it's nearly a year since I suppose the first level of restrictions were implemented in Ireland. On the origination side, it was nearly like, I suppose, reorganizing the chairs on the Titanic. For the first few weeks after that, a lot of existing clients reaching out, looking for what options were available. Thankfully, we had a full list of forbearance options that we offered to clients. So that, ranged from, repayment holidays from anything from 1 month to 3 months, interest only, full, obviously, capital and interest moratoriums. And indeed, we looked at term extensions as well, whereby people that had, gone on moratoriums, we looked to extend their term over a longer period to ensure that they weren't put under pressure once they open back up. So again, it's been a case of just monitoring what's coming out of government, monitoring the guidelines, and making sure that we as origination staff aren't putting in opportunities that within a number of weeks are seen to be on forbearance measures. So we've been very, very mindful of that. So look, hopefully as things recover and as the vaccination program is sped up in the coming weeks, and as we get to April 5th, you guys will see more opportunities, across different sectors and industries that perhaps, haven't been seen on the platform in some time. Okay, any more, Cassie, there?
Yeah, so I'll just get one more in there from Miles. So he just asked, does the central bank plan to regulate Flender?
Yeah, so I suppose to answer that question, I know Pascal Donoghue did reference it in the last budget that, the central bank are looking at regulation, not just for the peer-to-peer and crowdfunding space, but also indeed across the non-bank space in Ireland. So there, there's a huge proportion of non-bank activity here in Ireland, which I believe is under regulated in terms of statistics that are fed in to the central bank. So it is on government's agenda. It is on the central bank agenda. We are monitoring what's happening in Europe through the Banking and Payments Federation and the FinTech and Payments Association. So we are aware of some white papers that are coming out of Brussels on that. But for the foreseeable future, it isn't on I suppose the government's roadmap this year. But look, I think if anything, from my perspective, we would welcome regulation. It would obviously reduce the entry for other competitors into the Irish marketplace. So you know, as I said, I think from my perspective, we would welcome it. But, you know, as I said, I know it is on the agenda for government going forward.
Yeah, and if I could can I just add to that, Colin? Just when we came in on the 1st of December, we started transitioning the shift to become quasi-regulated under the codes of conduct for non-bank lending, which is being implemented at the moment. The acquisition of our new CFO, one of the main drivers behind that was to transition the business into a regulatory environment as fast as possible, because actually what we want to try and do is run the business as a regulated entity, so we can transition into regulation as soon as it becomes necessary to do so. So that transition is already occurring. It's something, you know, I've worked in the non-banking sector, which Colin's rightly said has predominantly been non-regulated, but any of the companies I've ever run, we've always run the businesses as if it was a regulated entity, and I think that's important for not just for the business itself, but you know, under corporate governance, and making sure that the reputation of the business is sanctioned, you know. So it's a great question, and you know, it's welcome. It's welcome to us, and yeah, we hope it comes sooner rather than later. So that's answer, and I think that's probably so if any further questions, we can circulate back, and Colin can organize to get the appropriate answers to those questions. Again, a great response to the survey, great work to Colin and Cassie and the team at Flender for putting this together. This is the first of many. It'll also be the first of many of, you know, Flender activities that will give you guys confidence in the marketplace that Flender is growing in the right direction, and we just hope and trust that you'll be part of that journey with us, that exciting journey of growth of Flender over the next 5 years. It's going to be an incredible business, providing incredible products to a much underserved market. So thanks a million for everybody for participating, and look forward to communicating in the future.
Thanks, everyone. Take care.
Take care.